with that, let's go ahead and get right to Ron Witz. Ron is the Regional Outreach Director at the Federal Reserve Bank of Minneapolis. In that capacity, Ron tracks current business conditions with a focus on employment and wages, construction, real estate, consumer spending, and tourism. In this role, Ron works with businesses in the bank's 6-state region and gives frequent speeches on economic conditions. You can follow him on Twitter at Ron Witz, and I recommend that. So please join me today in welcoming Ron Witz. Ron, take it away.
Thanks, Bruce, and thanks everyone for showing up today. I'm really pleased and honored to be part of your annual meeting. It sounds like a great board. I just hear a lot of friendliness, and I love being with groups that are familiar with each other. It tends to be more engaging. I really appreciate the opportunity to come talk with you today. I don't know if you know this, but you're going to be part of monetary policy today. Whenever I get in front of a business group, I'm always sharing a lot of information, but there's a great opportunity here for me to get information from you as well. So I do a lot of current business conditions research. As I was telling Bruce earlier, it's more art than science. I'm always trying to talk to businesses to get your feel on how the economy is for your business, in this case, in the retail industry. Now, I know retail involves a lot of different businesses. I'll give you some information on what I know about the retail industry. Unfortunately, there's not great real-time information, so I'm going to take the opportunity to get your opinions about how things are going as well. So I have a lot to present today, so I'm going to get moving. Before I do, I have to give you my bozo slide. So essentially, the views here are mine and not those of the Minneapolis Fed or the Federal Reserve System. So in case I happen to say something inaccurate or foolish, you have to blame the clown and not the circus. So what am I going to talk about today? So I'm going to try to frame a little bit what the data challenge is and our need for better real-time information. I'm going to tell you about who's affected and to what extent. I'm going to start with a little bit of traditional data, and then I'm going to give you some new data, and I'm also going to talk about a lot of survey work that we're doing right now. And at the end, I want to talk about consumer sentiment and the virus and how it influences our outlook. And as I mentioned, I'm going to get information from you, and I'm going to do this through an interactive survey. It's going to be interspersed in my presentation, so I need you to get your phone. I'm going to get you logged on to take that. With the size of the audience that we have, I really need everybody's participation. The more people we get to be involved, the better the information that everybody will be getting during this. I'm going to present a lot of data. Try not to focus on any individual chart or any specific thing. Think about the macro themes. I'm going to keep things really moving here. I'll share the PowerPoint afterwards. You can take a deeper look afterwards. So first, let's get logged on for the interactive survey. Again, this is your chance to tell the Minneapolis Fed how things are. This information goes to my boss, Bank President Neil Kashkari, who's in there as on FOMC meetings where the Fed decides interest rates and other monetary policy matters. You are also going to get all the information as well. So the results are going to populate in real time. So you're going to get this information too. So here's how we log on. So if you have your phone, go to step 2. You're going to send a text to the person that is 22333. Pretend that's the number for your mom or your wife or your husband or one of your kids. Then you're going to text the word Minneapolis, and if it capitalizes, that's just fine. And once you type the word Minneapolis, hit send, and you're going to watch for a little pop-up box that says you've been logged into a survey. And while we wait on that, Bruce, if you could maybe put step 2 and step 3 in the chat box. That way, if anyone's having trouble, we have those two. Those are really the two instructions that you need going forward. So if anyone's having trouble, they can continue to have that information. Once you get that pop-up box, stay in text mode. Don't hit that little hypertext link in the pop-up box. All the questions are going to be multiple choice. You're just going to hit a letter in text, and you're going to hit send, and we'll see the results. So I'm going to keep moving forward. Before I do though, Bruce, can some folks just give an indication whether or not we're having luck logging in?
All good here.
Okay.
Yep. Looks good.
All right. Sounds great. So off we go. So first I want to tell you a little bit about the data problem that we're having in the COVID economy right now. So, but pre-pandemic, this is a chart that I would also start with, but it was typically a lot more relevant pre-pandemic. What you have here is this gross domestic product, the largest measure we have for output. And while there's some utility to it for sure, what I want to point out is that I think everyone's familiar with the drop during the second quarter and then the bounce back in the third quarter. But even at the US level, across the nation, we only know activity in terms of output through September. If you go to the state level, we only have information for the second quarter. So a lot of the data that we would typically be paying attention to is really almost irrelevant right now. In terms of only having second quarter data for Minnesota in terms of output, that's a lifetime ago. So we are really trying to do a better job of figuring out how else we can get our hands around exactly how the economy is performing. And what I would say also is that in terms of where we're going, where we've gone since the end of quarter three, it kind of feels like we're seeing a little bit of a drop off in terms of growth. And what I would say is you kind of take off the volatility and where we are from the end of Q3 to the end of Q1, excuse me, to the end of Q3, that's kind of where we are. Like we're a little bit in a COVID mindset, even though we coming off a quarter of very strong growth, we think that was more of a bounce back than necessarily a trend. In terms of jobs, we get a little bit more recent information. They recently just came out with unemployment numbers, which I'll show you later on, but employment figures, so the total number of people employed still is only in October. Okay, so that's 2 months away. They should update fairly soon, but we're still working on dated information. What I would tell you that in terms of the job picture is that job levels are recovering, but they are tending to flatten out right now. So we're still more than 5% below pre-pandemic employment levels. If you look at the chart on the right, what you see is that our largest cities are also experiencing the jobs recovery a little bit differently. St. Cloud and Mankato seeing a really rapid bounce back, but now leveling off. Most of the rest really just seeing fairly modest job growth over the last couple of months especially. In terms of how we look at this recession, the one unique part of this recession is that this has been more of a services recession. Typically what you see in recessions is the goods producers, businesses in manufacturing and construction, those tend to be hit harder in recessions, and it's been exactly the opposite in this recession. So we are seeing more firms that are in that service sector get hit harder than they typically have. What does that mean in retail? The interesting part here, and this is actually something that surprised me, I knew retail had been kind of doing better than many. And again, retail here, while I think a lot of the members for this association are also service oriented, in terms of how they define retail trade, that's mostly those firms that sell goods. And goods to consumers. So this is a little bit more narrow than maybe what this particular group is. But in general, because the goods sector has been less hard hit, that's one of the reasons why we're seeing retail trade, at least from an employment standpoint, fare a little bit better than a lot of the other sectors. So in terms of public information, I'm going to show you a few things there, but we're starting to get better private data that I think maybe can put a little bit of flesh on that bone. So first, I'm going to tell you about what I can find from a public standpoint. And you have the chart on the right. There's really two things that I'm trying to show here. You have the dark blue line, which is U.S. retail sales that you can get from the U.S. Census. I think a reasonably good data set. It goes through November. And I think what that shows is kind of what the last chart showed, is that while we did have that deep drop, there was fairly quick recovery and continued growth until fairly recently, October and November, starting to see a little bit of drop off there. But again, all things considered, compared to a lot of other sectors, I would call this really quite positive. The problem, as you start to get lower and lower, that's a national perspective. In terms of state level data, very, very limited in terms of any public data that I can get my hands on. The smallpox part of the chart that you see there are Minnesota sales tax. And as you can see, there's very little pattern to try to figure out here, in part because not all of the months in this 23-month period are available. There's probably 7 months that were data I just simply couldn't find. But there's a lot of new big data coming out from private organizations. There's this group called Opportunity Insight. It's kind of a consortium of university think tanks, and who have gotten a lot of permissions from large data houses to present new data on a lot of things. So if you have an opportunity, I would look at this site called Opportunity Insights. What some of the data that they are showing, which really covers a lot of transactional data via credit card, is that total consumer spending in Minnesota. So if you look at the chart on the left, here's where we were pre-pandemic. The good news is that we've seen rebound in consumer spending, but is generally held about 5 to 10% below pre-pandemic levels. Now that's total consumer spending, not just retail. If you take a look at the breakdown in different categories, the better news is that retail spending actually has been, I would say, the leader in this consumer area. So in terms of retail spending in Minnesota, it has been above par, but only slightly. So again, it feels to me like, as I'm always trying to triangulate information, this to me kind of feels like a reasonably good support of the trends that we're seeing in employment in the retail trade area, and especially in comparison to other areas. Again, some of whom might be involved in this call here. If you look at spending in restaurants and hotel, significantly down from where it was previously. Entertainment and recreation, even more so. And again, now you're looking at this recent information, again, I think, which has everything to do with the additional restrictions that were put in place in mid-November. I think we'll see some rebound once those restrictions are lifted, and some of them have been. But I don't expect any bounce back near par, I think, for some time.
Ron, quick
Yes.
question. Does this include all e-commerce transactions in Minnesota as well?
I believe it. I can't say for sure. I don't know all of the data behind that because it's credit. A lot of it is credit card based, so it's not retailer based. We believe it's transactional from the buyer. I do believe that would be included here.
That makes sense based on how that looks.
Right.
Hey,
So
Ron,
the other thing, I'm sorry. Go ahead.
does that retail sector coincide with the sectors from unemployment? So just curious if construction and like home remodeling, while obviously purchases at Home Depot or Lowe's would be included in that, but does it include, other retail transactions that might not be picked up from those types of retailers, do you think?
That's very hard to say. I would assume, again, I think, again, if they are selling a good, my guess is that it would be included in here.
Gotcha.
I am not intimately familiar with all of the methodology behind this. It's something that I'm hoping to dive into a little bit more. But again, being it transactional, be it goods purchases, I'd be inclined to think that is included.
Yeah.
And frankly, I think it's one of the reasons why you're seeing positive response here, because one of the things we know is that building supply companies or outlets have seen really strong sales.
Yeah. No, absolutely. Thank you.
Okay.
Ron,
So,
one quick question.
Yes.
You probably don't have this. Is there any way we can get at data that might split that retail spending into small, medium, and large type retailers? Is there any segmentation of small business versus medium and or national?
Well, from this database, not, because again, we're looking at purchase. We're looking from the purchase standpoint, not from the business standpoint.
Oh, that's right. Right.
Now, again, I will show you something. I will show you something later on in some of the survey work that I do that we're trying to get a little bit of a handle on that. I would say we don't know as much as we would like to.
Thank you.
Okay, so I also have a lot of business contacts that I talk to. And in general, in terms of some of the holiday trends, I don't think this is going to be any surprise to anyone on the call here. We know that online sales are up significantly. The difficult part of that is we don't know how much is cannibalizing in-store sales, because there isn't real-time information to essentially split those out. So the only thing I can tell you is that I know online sales are up. I know in-store sales are down. I can't tell you overall what's happening. In terms of Black Friday, we know that in-store shopping was lighter this year, few surges. I have been in contact with some malls and they reported lower than normal traffic, but to be honest, they were actually rather positive about it because it beat their expectations. There was one regional mall that I talked to, their foot traffic on weekends, weekdays, 50 to 60% down. Again, he looked at it kind of a good news, bad news situation. Better than he expected, still really bad. I think overall, we've heard expectations from big box and large retailers are generally better than small retailers. I also talked to, outside of Minnesota, I talked to retailers and those and associations. And what I'm hearing from South Dakota is that there's a mixed bag out there. Real good activity at hardware stores and other things like that, but less in apparel. And North Dakota retailers are really cautious. They have a different set of circumstances because they have an oil industry that's really in decline right now and really struggling, and also just the uncertainty of the new administration with regulation. So they're facing kind of an even different set of complications than some are. So I've told you a little bit about what I know. Now is the time for you to tell me how you see things. Okay, so I'm really interested in your recent business. And right now I'm only thinking November to date. I know it's a fairly small window, but again, I'm trying to inform my boss, Neil Kashkari, about how things are going. So all you need to do is hit whatever letter corresponds in your text and hit send, and we should see some results populate real quickly. And if there are other opportunities while people are filling this out and we see the horse race kind of unfold, really a good opportunity for me to take questions also. So it looks like with this group, and I know there are some chambers on, and welcome. I'm glad to see that you guys are on the call. If you want to respond, generally how you're perceiving your business community, your retail community in your area, that would be great. And again, if you haven't logged on yet, I'd love it for you to log on to participate in this. The instructions should be in the chat box. And it looks like right now, unfortunately, we're seeing that that sales compared to last year are not as good. I'm not terribly surprised at that. There's just a lot of challenges out in the market right now that I think everybody is experiencing. So that's what recent business is. The Fed is really, really interested also in sentiment. So I'm wondering if you can tell me what next year, the first quarter of next year looks like. And again, quarter to quarter comparison, 21 compared to 2020, first quarter. And in the chat box too, if folks have anything that they want to add, like I'm very curious to know who's very optimistic. Is it vaccine based? Are you in a market that is growing? Have you found a niche? Or if you're very pessimistic, if you could offer me any additional information in the chat box, I would love to be able to get that at maybe after the presentation, Bruce, because any additional information and nuance you can offer is really useful for me to provide context to Neil as well. And here I would say actually we have slightly better results, a little bit more optimism in this than we did on the other one. So at least that's a small takeaway for me. So this is a survey. Whenever I talk to business groups, I like to do this. These little pulse surveys can be really useful, but we've also done a lot of additional survey work outside of these presentations because you're really the experts, and businesses really offer us an awful lot of feedback and information about how the economy is going. Since March, we've done 15 surveys of businesses. We've gotten almost 10,000 responses, actually more than 10,000 responses. And equally important, businesses have really kind of poured their heart out to us. Most of the time we don't get a lot of comments to surveys. These sets of surveys we've been inundated with open comments that really help give us kind of a granular feel for how businesses are responding during the pandemic. Right now I have 4 quarterly surveys that are in rotation. 2 are general business. We also do a construction survey, and we also do a hospitality and tourism survey that I think you'll find interesting. So every month right now, we're getting new insights on the pandemic's impact from businesses like you, and we think that's really critical. Part of it also is critical and I think really useful, and one of the reasons that we've gotten really good traction with this is because we share that data back with our industry partners. So that way, it's not just information for the Minneapolis Fed, it's information for everybody. So what are we learning? So the first survey I'm going to talk real quick about, I think I'm going to spend 5 or 6 slides here, hopefully pretty quickly, just to give you a feel for some of the things that we're learning. So our hospitality and tourism survey, we literally closed it just earlier this week. And we got almost 700 responses. I do it in partnership with Hospitality Minnesota and Explore Minnesota Tourism. And so they helped me get this survey out to the business community in this sector. And in general, I don't think it's a surprise. The sector in general has really been hurt. But what I want to show here is that some are getting hurt more than others. So overnight accommodation, if that were the only bar you were to see, that's catastrophic. It just happens to not be quite as catastrophic as the food and drink sector is right now. Again, because we know that they're getting hurt. We did ask about how badly they were affected by the new by the restrictions that were put in mid-November. I'm not going to show you that chart because I think we can guess what they said. They said, I think it was either 70 or 80% said they were significantly negatively affected by that. Again, not a surprise. I think what we're hearing though is that while those additional restrictions were problematic without a doubt, generally speaking, we're hearing that it's just more of a continuation of a bad streak for a lot of people. You know, and here again, what we ask them is, how are things performing over the course of the pandemic? For the most part of what I want you to focus on is any of the shades of red. Those are what I'm kind of classifying as doing poorly. Some, you know, the harder the red, the more poorly they're doing. And in general, again, here you see that food and drink have really been seeing problems all pandemic long. We also ask businesses to identify where they are so we can get a little bit better regional idea. And what we're finding out is that among hospitality and tourism firms, that the metro actually is suffering significantly worse than, say, some of the areas that have high amenity outdoor attractions. We've heard up in the Northeast and in the Central where there's lots of lakes and outdoor opportunities, that many actually had some of their best years ever during the summer. In part because people were looking to do something, and those were the areas that you could do something and still maintain social distancing and things like that. So we really are seeing regional differences, but nobody's getting away from seeing some fairly significant impacts. We also do a construction survey, and the reason is we really think construction's a bellwether sector. You're not going to build a new house, you're not going to build an office tower, you're not going to build a new warehouse if you don't have some confidence in the future of being able to pay for that building. So we do a survey with construction. The only chart I'm going to show you with this is that right now we ask them about their future pipeline of work, requests for proposals, and generally what we've been hearing since the start of the pandemic is that they're seeing a shrinking pipeline for new work. Pre-pandemic, going in this time last year, construction sector was really quite strong, very confident. I would say now, I think there's a fair amount of concern about work through the end of the year and into 2021. Again, this is a survey we did in late October, so it's only a little bit more than a month and a half old. We'll be redoing that survey in February. And then lastly, I also do a general business survey, and I did the most recently I did that was in early October. I'll be redoing it again in January. And the one thing that I wanted to show you here, and it kind of relates to a comment I made earlier about, or a question I got earlier about size. One of the things we've seen very, very persistently is that sole proprietors and small firms have been more negatively impacted than larger firms. Doesn't mean larger firms are getting off with no impact. Again, if you'd only see the large firms on this, you would say that's a pretty catastrophic outcome, that they've seen such negative revenue trends. It just so happens that right now they're seeing less negative revenue trends than smaller businesses are. So let's talk a little bit about job demand. So right now, the good news in terms of job supply, and here I want to make a quick note to the box up in the right-hand corner. So the Federal Reserve has really been cognizant about trying to get more information that's real time. We're sharing that publicly. So we have this COVID dashboard online that I would highly recommend you take a look at. One of the things that we track through Indeed are job postings. Job postings fell very dramatically in the early part of the pandemic. It has since been bouncing. It has been slowly growing back. What I would say is it seems to be stuck at roughly about 10% below pre-pandemic levels, and Minnesota being worse than Wisconsin, worse than the US too in terms of job. But we are seeing we know that there's a fair number of jobs out there. We're actually hearing about labor tightness. Going back to the construction survey, it's the thing I still hear most from a lot of construction companies is they still can't find labor. In terms of unemployment, I'm going to go through this fairly quickly. I think we're familiar with the fact that unemployment went way up, higher than the Great Recession, and it has since gone down really quite aggressively. What I would warn you about is take these unemployment rates with a little grain of salt right now. A lot of the reduction in unemployment in Minnesota is actually the result of falling labor force participation rates. Why does that matter? Well, as a matter of fact, in the pre-pandemic, we were actually hoping to see the pivot from a long decline in labor force participation, especially in Minnesota and the US. Wisconsin, not so much, but we're starting to see potentially a little uptick. And then the pandemic hit, and we've seen labor force participation absolutely plummet, especially in Minnesota. But what I would say is there's a lot of noise in this data right now. So there's a lot of volatility going on right now in these measures, in part because I think that some of the things that are affecting people's ability to work, virtual K-12, availability of daycare, quarantines, nervousness over virus transmission, things like that. So this is one of those measures that I'm watching really closely, because if people are not even looking to go to work, they're not in the unemployment rate itself. The other thing I take a look at that I would just kind of add to the complexity of unemployment is that initial claims, that's the blue line, is actually on the increase right now, and it's well elevated over normal levels. Now, we normally see initial claims go up right now because of seasonality, but they are 2 to 3 times above what normal would be right now. And in terms of continuing claims, those that are actually receiving unemployment benefits, they're actually higher right now than they were at the peak of the Great Recession. So again, we know there's a lot of people that are unemployed, but unemployment has gone down significantly of late. So I think there's something that's there's probably going to be a little playing out of that as we move forward in time. Okay, survey time. So I've told you a lot about other things like workforce. Here's where you can really provide us with some very useful information. We're very interested in workforce. It's one of our dual mandates, is to try to maximize employment. So I'm interested to know from you, how is workforce with your firms right now? We're hearing about some definitely really being short of labor. We know grocery stores have been really looking for lots of employees. We know others maybe are not. Those that that are in the restaurant business. And here, again, despite maybe what it was a more pessimistic view in terms of recent revenue, one of the things that this is showing me is I think people are, and what I hear a lot is firms are really valuing employees. They knew how hard they had to work pre-pandemic to get employees when unemployment rates were so low. I see this fairly persistently, that workforce trends are more positive than revenue trends are. Okay, now what about the future? What do you expect to do in the first quarter? And I'll give you a little bit of time, because I am looking for a little nuance, because I know there can be some seasonality effects going on here. And I'm wondering, now would actually be a good time too. If anyone has any questions, I would love to take one. And Bruce, just so you're aware, I am hoping to target roughly 10:50 to be done. And I don't know exactly if you're planning on a hard stop. I'm perfectly fine with that. I'm also willing to go a little bit longer if folks want to stay on the call a little bit longer and chat.
Thanks, Ron. Yeah, we'll take at least 5 minutes. That'll get us up to that 10:55. And if folks want to hang on after that, but we'll shoot for that 10:55.
Okay, great.
Hey, Ron, I know a lot of folks on this in this meeting maybe just personally have a little bit of Wisconsin presence. So I've seen a couple of Wisconsin inclusions in there. Thanks for that. That's a nice value added. We appreciate that.
Wonderful. And I happen to be a native cheesehead, so I appreciate the shout out. So one of the other things that we pay a lot of attention to are wages. I would say of all the data that's out there, wages are the worst of the set. For lots of reasons, which I won't go into, but anytime I can get information from businesses about what they see, what they've recently done on wages, and what they expect to do in the future is really, really useful. And here, I think in part because we are seeing some labor shortage, labor tightness, despite higher unemployment, lots of people on benefits. Again, this is what I do see fairly often. There's a small subset, tends to be 15 to 10 to 15% that have actually had to cut, but I do see wage growth, and I think that's actually a positive sign for the economy, and it's a positive sign for labor force participation. What about future wages? What do you expect to happen over the coming 12 months? And I would say even more positive in this case. I have to assume that, some of this is, oriented towards the hopeful vaccine that, will hopefully be in place at some point this year in terms of, some herd immunity. But in general, more than 50% are expecting to increase wages, and nobody expecting wage decreases. So again, for me, the trend appears to be positive moving forward, even if it's not particularly glowing. So let's talk a little bit about the economic outlook and the virus and consumer sentiment. I'm going to give you just a real quick timeline of kind of how I think about where we've gone in the pandemic. So we know about the April plunge. June and July, we saw some nice bounce back. That was mostly due to the reopening of state economies. That's where the plunge came from. And the really, really big federal stimulus, not only for households, but also in the PPP loans. Since then, I would say overall activity has been fairly mixed. Some sectors have been recovering more quickly than others. The third quarter was unquestionably strong, at least, in terms of the data. Again, not for everybody, but a lot. We've heard that manufacturing indexes have been strong. Right now, the best information that we have is that the fourth quarter is showing some signs of softness. I think we're seeing that in the retail sector and in a lot of other areas. Surveys are suggesting that there really is kind of this COVID mindset, and I think reasonably so. We're just hearing about a lot of uncertainty, which, again, I think that's to be expected because this is still an environment with a lot of volatility. We know, or we expect there to be a stimulus. At least that seems to be where we're heading. I think that will help. Clearly, the most important information here is the vaccine. But we don't know exactly what's happening with the vaccine. That's in the future, and we can't predict that. So, what does all this mean in terms of the outlook? How does the Fed think about this? And right now, we're really trying to look for clues from consumer confidence. I won't go into detail with this. You can look at it maybe later, or I can come back to it in the Q&A. Basically, what this says is we asked companies about their current production capacity, and we asked them then about demand in relation to their existing or current operating capacity. Basically, what they told us is that consumer demand is lagging even restrained capacity. So what that tells us is that consumers are paying some attention to what's happening in outside of the economy and in the health environment regarding the virus. My boss, Neil Kashkari, has been pretty adamant about this, that the recovery is likely to be consumer driven, and their consumer confidence is going to be connected to infection mortality trends. But we're also hearing about a lot of disruption in the economy itself as it relates to the virus. Because there are daycare issues, there's virtual K-12 school that parents and workers have to worry about. There are lots of quarantine workers and those that have had exposure to those workers. We're hearing about it, and really a lot about supply chain disruption. So there's just really a lot of problem as it relates to the virus having gone higher. And so what Neil's point is that the base for a strong recovery, short of the virus, short of the vaccine, or once the vaccine is kind of put in place and widely distributed, the strong base really demands that we try to control the virus. It doesn't mean that if we don't, that we're bad people. All it means from an economic standpoint is that if we don't control the virus, it's likely to mean a longer and slower recovery. So very quickly on this, again, this is information on our dashboard. What we're seeing increasingly is consumer reaction to virus trends. So on our website, we show that new cases really went up very high in November. They're starting to come down, which is good. Seeing the same in ICU admits and hospitalizations in Minnesota. And what we're also seeing, this is the consumer data, some of the consumer data from Minnesota that we're getting, is that we're generally seeing not a one-on-one relationship, but we're seeing consumer activity react to viruses. So generally, what does that mean? What we know is that consumer spending equals 2/3 of the economy. And we're seeing better and better evidence that consumers are influenced by the degree that we are containing the virus. We also know that general business operations have been influenced as well. Adjusting to a vaccine, that's going to be the easy part. I don't think there's any question about that. But we don't know exactly how far away herd immunity is. So for us, for the Fed, controlling the virus, that's an economic truism. It's not a political one. For us, it's really hard to imagine how we have a strong recovery without controlling the virus up to when the point we have herd immunity. And that's because what happens between now and herd immunity, that's going to set the floor and the trajectory for future growth. Okay, so I don't think we can just wish away time here in terms of the economy. Now, that doesn't mean that we can't pay attention. We can just do whatever restrictions we want. We have to give some consideration to those businesses that are directly affected by operating restrictions, as well as those workers. What exactly we should do, that's really out of my area of expertise. Neil has been a very vocal proponent in terms of supporting businesses that have been affected and trying to get some federal stimulus out there to try to get more businesses over to across the bridge to when we have herd immunity. These are a lot of things. I've thrown an awful lot of data at you. We are really paying a lot of attention not only to the economy, but to health trends as well, because we really do see them really having influence on each other like we've never seen before. A lot of information on our website. Happy to pass along additional information as well. Hopefully this has been useful to you in terms of giving you some better context for how the economy is performing. And I really just want to say thanks to everyone for offering me some information to take back to Neil about how businesses in Minnesota are reacting to the pandemic. And before I put this open to questions, I also just want to wish everyone luck. Running a business is terribly difficult in normal circumstances, and in a pandemic, it's probably near close to impossible. So I just want to wish everyone luck through the holiday season and into 2021. And with that, I would be happy to take any additional questions that folks have.
Thanks, Ron. Any questions off the top of folks' head? Otherwise, I have one.
Ron, there's been thanks for excellent presentation. There's been a lot of talk from the Chairman Powell as well as other members of the Fed. I know primarily your purview is monetary, from a monetary standpoint, but I've been hearing this word that's come up quite a bit, especially your counterparts in Europe and Asia, talking about ESG and what that means for not only publicly traded companies, but also private ones as well. Thinking to some of the decisions that's gone on in California, just wondering some of your thoughts there.
I hate to even acknowledge this. ESG meaning?
Oops, you're on mute there, Lonnie.
Sorry, environmental, social, and governance.
Oh, okay, yeah. Without going into a lot of detail, I can't say I have anything really deep to offer here. What I would say is that on two levels, the Fed is really thinking about equity, and we're thinking about equity from a climate standpoint. I think we've started to get more vocal about the fact that climate change is impacting the economy, and we have to start paying attention to that. And how the Fed does that, I think for right now, I think we're simply trying to communicate that it's important. And as it relates to monetary policy, I don't know exactly how it gets incorporated. The other area that I would say, I would say our bank is a leader in this, and Neil Kashkari has been a vocal person, a vocal leader in this area, is equity from a racial standpoint. We are committing ourselves in a number of ways of really trying to shine the light on equity, on disparities in the employment market, for worker outcomes, and we're really trying to have a better grasp on what that means from a monetary policy standpoint. Neil in particular has been adamant about not worrying about inflation as much as we have, because right before the pandemic, we were finally starting to really see gains at income levels at the bottom quartile level. And his belief was that monetary policy actually absolutely had a role in that by not increasing interest rates prematurely. And so we are spending more research time on disparities, and we are trying to find avenues of making monetary policy relevant in that equity space as well. I hope I answered your question.
Thanks, Lonnie. Other questions?
Ron, good morning. Dave Ring with Quick Trip. Just a quick question. What does the Fed see with the evolution of people working more at home and the impact that's going to have on the commercial real estate market in terms of higher vacancy rates and, maybe depressed prices and so forth?
Well, I don't think there's any question. The pandemic has thrown a wrench in all kinds of business models. I don't think there's any question commercial real estate, office space in particular, is going to go through a difficult period of kind of first even realizing what the long-term trend is. Downtowns, I think in particular, are going to suffer more than office space in other areas. Clearly in downtown Minneapolis, if I'm not mistaken, I believe worker occupancy is roughly 20% of what it was pre-pandemic. So in terms of how that plays out, the good part is that most of the space is not on some kind of short lease time. So I think the market will have some time to figure this out. I am hearing about a fair amount of lease renegotiation. I think for everybody involved, that's probably a good thing. But I don't think you're likely to see office vacancy rates go from depending on who you look at, 10, 15, 20% in some markets. I don't think you're going to see it go to 50% right away. I think there's unquestionably going to be some increase. I think some markets are likely going to look at transition of space to other uses. But I think we're too far early in this trend to really know where it's heading. I get asked a fair amount to kind of project in the future, and I'm pretty reluctant to, only because it feels like we've been in this pandemic for years. We've been in it for less than 9 months. And so I don't know what's going to happen. I don't know what the future holds a year or 2 years down the road. I think we've already seen business models change fairly dramatically. I'm fairly confident of markets being able to do that, even in some things that would seem to be fairly more unmovable, like maybe office space. I think there's going to be some difficulty, but I think long term that they'll find a way. They'll find a way to make use of it.
Thanks very much.
Great question, Dave. Any final questions?
Hey, Ron.
Yeah.
Our former kind of financial guru at the state, Myron Franz, used to always compare us as a good example of the entire country's economy. That as the U.S. economy goes, our economy, and we get asked a lot by legislators to compare ourselves regionally. And I'm just curious if you could give us kind of your reaction to that. How we're doing regionally compared to other parts of the country. It feels like we're doing, okay, or maybe a little bit better than other regions, but you're looking at bigger data sets than we are. So just curious on that.
Right. So yes, I think the characterization generally holds. How the U.S. goes, Minnesota tends to hold, and that's because we have an economy from an industry mix standpoint that is fairly reflective of the U.S. What I would say is that it's starting to decouple a little bit in recent years, not a lot. And in terms of the region, I would say I see a little bit of lumpiness. Like if you would have compared Minnesota to the Dakotas early in the pandemic, clearly they were doing better. In part, again, they did have fewer business restrictions. I would say more importantly, they had low virus. In part, they had low virus transmission because they're very rural states. Okay, now you're seeing the opposite of that happen. You're seeing things really spike in the Dakotas. So I'm waiting for that data again, especially some of that real-time consumer data, to get a better sense for how things are reacting. I think for the most part, we are mirroring Wisconsin fairly closely. I think we're maybe doing a little bit better. Job growth has actually bounced back a little bit better in Wisconsin. Our unemployment rate in Minnesota is better. again, I'm unconfident of being able to trust the unemployment trend right now in Minnesota. There seems to have been a significantly larger drop in labor force participation in Minnesota than in Wisconsin, something that I can't frankly explain. I don't know why that would be the case. So honestly, the punt on this is, from the information that we have, the states up here seem to be following a lot of the same trends, with some variation. Again, because we're both goods, Minnesota and Wisconsin are both proportionately larger goods producers. I think that's actually helped up here.
No, thank you. That's a great presentation. Just want to say thank you again.
I appreciate that.
Yeah, Ron, thanks so much for joining us today. And I know Ron had his contact information up there. I know, Ron, I know you're always looking for stories too, right? I mean, there's the data and there's the anecdote. And what I love about the Fed is you try to bring those things together and have it make some sense for us. So thank you so much for sharing your insights today. We really, really appreciate it, and hope you and your family have a great holiday season. In fact, I'll extend that to everybody at the meeting today. Thanks so much for 2020. And I do hope, honestly, I hope everybody gets a little downtime around the holidays. I know it's been a little intense, so I hope you get to sit close to those loved ones and enjoy a little time around the holidays. Ruthina, looking at you, I know you'll be busy at the store. Actually, I hope you're busy nonstop, Ruthina, there, as well as the others of you. So I know Lisa said on the front end, but thank you to Savannah and Tom, just a great resource here at the association. I know I always say it, but we're so happy that Savannah chooses to apply her talents here at the association, and appreciate that. And Tom, thanks for being a great resource too. Always a lot of insight on time, and we really appreciate that. So again, Dave, looking forward to your leadership next year. Lisa, thank you so much for your 2020. Everybody have a great, safe day, and we'll connect soon. Be safe. Have a great holiday.
Thanks again.
Thanks, Tom.
Merry Christmas.
Thanks, Ron.